Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today, we have back the CEO, Kyle Hall from INEO Tech Corp. INEO trades on the TSX Venture Exchange under the symbol INEO, and it also trades on the OTC under INEOF. The company is currently trading at 10 cents with about 76 million shares outstanding, or about a $7.6 million market cap. I'd now like to hand it over to Paul Andriola.
Thanks so much, Trevor. Kyle, great to have you back. By my notes, I think the last time we saw you was about a year ago, so we got plenty of stuff to catch up on. INEO Tech, I know what you guys do. There's a number of new faces in our membership that doesn't. So why don't we just give you a chance to give us a sort of refresher on what INEO is all about, and then we can follow up with some questions.
Awesome. Thanks, guys. Appreciate having me back. Everyone, I'll breeze through the presentation pretty quickly. So if you want to dig in on anything, just we'll do that in the questions. But because we have a mix here, I'll give it just the overview, and we can focus on other things as we go forward. So INEO, we fashion ourselves as a tech company that does a lot of things. If you look at some of the stuff, we're a digital media company, we're a loss prevention company, we're analytics, but really what we do is we've really mastered the ability of taking a suite of technologies. We've patented them, put them into a kind of box them up and put them into a retail store. And our real kind of key to entry is we get the ability of going in the store. We get invited in the store because we're really good at the theft protection systems at the front entrance. That then Trojan horses in our digital screen, our analytics. There's probably, I don't know, 50, 60 companies out there saying they're going to do AI and data analytics for retailers. And then you have other sign companies and that, but they're all fighting to try and get retailer agreements. And we're getting them because we have this unique way of getting into the retail store. We founded the company in 2016. It was 3 or 4 years of just real grunt work. We didn't take any outside money, funded it ourselves. And we got the technology built. Like I said, we patented it. We deployed it in a test network, and then we did an RTO on the TSX.V, and we've raised a few rounds since then. And I'm going to tell you how we utilize that money today. A couple of things I'm going to talk about is what we're doing with our sales pipeline, where we're rolling out systems. One thing we haven't been able to do is really disclose and talk about some of these retailers. We're dealing with some of the biggest and best retailers out there, and they're very, very nasty. Anytime we see anything public about it, I don't know, they're so private on it. But our systems are publicly available, and we can see them. We got pictures of them up on our websites and stuff like that. So that's good. When we talk about ProScreen, we've got this big Spanish partner. Talk about technology a little bit, our revenue model, and management team. So this is what our system looks like. We call it a welcoming system because it is at the front door. It's the first thing customers see as they walk in, last thing they see as they leave. And like I was saying, it's a combination system. It does digital signage, which we're very good at. Very bright, vibrant signage. It's the first thing you see as you walk in. But we also do the loss prevention, preventing theft at the entrance or the exit of the door, the store. Retailers have, kind of love and hate relationship with loss prevention. But if they remove those traditional old systems that kind of look ugly at the store, their theft just goes through the roof. So they need to have it. And we do it in a nice form factor that's pleasing to the customer, pleasing to the store. We combine it with always on, always connected dashboard where we built a full content management system to put the advertising on the systems to track the alarm events, grab video off the alarm events. And we do some AI on it so that we can capture data analytics around the customer. So on the base level of why retailers want us in the store, like I say, we replace those traditional loss prevention systems with something that looks a lot better and does a lot more. And interesting, some of our customers that have implemented it, large retailers, have really reinvigorated their loss prevention because they didn't even know when their systems were on before. They didn't know whether, when they went off, the alarms. We give them detailed reports that we trend when their alarms go off during the day, how many per store, and they've started sending out reports to their stores. Here's the stores, top 10 stores this week with the most alarms. Here's the stores with the least alarms. and trending. What time of the day does it happen? Do we need to position a security person at the front door at 5 till 9 at night because we're losing too much merchandise? And as much as they might not even be stopping some of that, some of the organized crime still is, it's hard to prevent the organized crime. We're stopping more of the, I guess you would call the casual shoplifters, but the organized crime, we know when they're stealing now. We know when the products are leaving the store, and we can give them that data. On the analytics side, it's really about giving them information on the people that are coming out of the store, giving them a customer count so they can do simple things like conversion ratios and how many customers do we have versus how many do we get, sales did we get? Do we convert better if we had a salesperson to the floor? Do we convert better when the manager's there? A lot of data that we can give them, and we combine a lot of different things. And using the AI within the system, we do detection. We don't do any recognition. We stay inside all the privacy laws. We don't retain the video unless it's of an alarm event. And we only put like a marker, a tally up to the database, but we can give them a lot of information what's going on at the front door. It's really, you'll hear a lot coming out of retail lately about the smart entrance and the smart exit, the smart store, and we fit right into that. They're investing a lot of money into improving their operations. But for us, really kind of the pointy end of the stick right now is the digital screen. And it's because retail media is the fastest growing area of advertising in any market right now. And basically the early stages of retail media, we're taking dollars away from Meta and we're taking dollars away from Google, and it's being spent on the retailer's website. So sponsored ads on the retailer's website, that's now filtering down into signage in store. Most of the shopping still takes place in the store, yet all the advertising dollars are going to the website, right? So there's a shift happening here. But the big shift that's happening is the spend of consumer packaged goods brands spending with the retailer. Walmart announced $2.8 billion in revenue last year from advertising, of which they're making like 70, 80 points on versus everything else they sell in the store. So they love it. Even smaller retailers, they're still big. Nordstrom, they announced that they did over 40 million last year in advertising revenue. So that's what's fueling them wanting screens in the store in combination with the loss prevention systems. This is kind of what it looks like. Those display ads that are displayed on the site, almost the same form factor of the system that we put in the store. So we've got the system at the front entrance. We've integrated it into the retail media network, where we provide them the analytics capabilities so that they know when customers are coming and going and be able to target it. And we have the infrastructure to deploy the hardware and then run it, make sure it operates, and make sure that the proper ads showing at the right time of day. We built out the ecosystem of it. Originally, it was just all about the welcoming pedestal. It was the core of the welcoming system, and we had a companion gate, the welcoming gate that went with it. So some entrances, a store might have like a 6-foot entrance, and some places we put a welcoming pedestal on each side, but other places we put a pedestal and a gate. So there's only the one system there. That was kind of the core to start with. And then we had retailers that had much wider openings, and they'd have double doors. And so we'd put a duo in the middle. And the duo, obviously you can't see it here, but there's a screen on each side of it. And so you can see it from both sides. And then we started looking at the opportunity of putting screens elsewhere in the store. And so it's a bit of a nascent business for us, putting screens elsewhere in the store, but we're starting to roll those out. So our cost of deploying a welcoming system, the pedestal, the gate, or a duo in the store is, it's kind of a fixed cost. And if we get to put in 1, 2, 3, or 4, or 5 other screens around the store, it's incremental cost for us to put those in, but we get much more revenue opportunity. And when we got, while we were pitching those other screens, we had a couple of retailers say, well, hey, we want to put digital greeters up there. So we have messaging at the end aisle over here, elsewhere in the store. We like the form factor of your pedestal of the welcoming system. We'd like to put that elsewhere in the store. And so what we did is we dumbed down the system. We ripped out the loss prevention. We can deploy it much cheaper. And it's really just a nice form factor pedestal with a digital screen that we can put elsewhere in the store. So as with rollout right now, this is actually, it's only a month or so old, but it's actually getting dated in a hurry. We're hitting a lot of areas in the US already. Obviously we started in our Canadian market here. We had 140 liquor stores in BC and Alberta, which is our test network, but we're rolling out some large retailers across the US right now. An office supply chain is our biggest rollout customer, and we are approaching 75 locations with them. We've got a drugstore chain we've deployed some systems with, and another chain that's more of a all-around customer, I can say, tool agriculture type product customer that would put some in. And so the footprint is getting there. It's actually gone faster than we expected this year. We raised some money last year that we were using to fund this, and we projected out where that cross with the revenue and the use of capital is, and we've been trying to manage that effectively. That's our biggest challenge right now, is that retailers love it so much, they want to go fast. We want to go fast too, but we have to be careful the size of the company that we are. So if we get down to the business model of how it works, is really the systems then are fueled by advertising. There's some analytics revenue that's starting to come. We're building that side of the business, but it's really about today the digital screen and the retailers integrating their retail media platforms, but we've also integrated some media partners of our own, especially for our Canadian network. Adapt Media, Western Media Group are reselling the inventory in our systems. High Stack, Broadsign, Vista are programmatic partners where people, advertising agencies, brands log into their screens and say, show me all the screens available to advertise at Robson and Granville and Vancouver. And if our screens are in that area, they'll come up and they can just buy advertising on them without us even doing anything. And we get fed the advertising. So that's starting to grow. It's a smaller piece of the overall industry, but it's the growing part of the industry right now. Lastly, I just want to get to Prosegur, our Spanish partner. Very big security company that operates mostly in Europe and Latin America. We signed a deal with them 1.5 years ago for them to distribute our product. They've been a great partner so far. Everything's going well with them. A little slower, they're just a big company. They've got a lot of agreements, a lot of things going on, but they're making headway. And some of our deployments in the US have been 100% exclusively with them. Some we've done ourselves, but some we're doing through them. And so it's starting to move. They've rebranded our product as Evo. That's what they call it within their network. And they've been showing it at trade shows around the world. There's just that one in Denver a couple of weeks ago, and had a great response out of their retail customers that they had there. So probably the only other thing to say about it is part of the agreement was they loved our patents. They felt that it was quite a defensible patent. And we signed the agreement that they also have the right to defend those patents. So if a large company comes along and wants to try and attack us on it, bleed us on it, they have the right to step in and defend if we want them to, or if they want to. Revenue-wise, coming from a small base, but the revenue is all about systems in the field. And so that's why we're moving as fast as we can to put those systems in a controlled pace, because then our revenue follows. Follows a few months later. You have to get the analytics, we get the numbers generated for being able to sell the advertising, so then they can have the metrics around this store does this amount of traffic in this time period, and here's what the rates will go for that store. But it's moving along. We like what we see out there. Production-wise, we produce here in Surrey, British Columbia right now, but we're also moving some manufacturing over to Prosegur. We thought we'd move more there shorter term, like a year or so ago. We've actually done most of it out of, almost all of it out of Surrey still right now. Shipping has been very expensive, starting to come down a bit. So as those match up and our volumes go up, we'll have to do more over with the Prosegur facility. And then just a bit of background. You guys know me, you can look me up. Greg, partner. Greg's the technical mind within the company. I am dealing with most of the outside world. Steve Mattias, he was just actually out here yesterday. He came out, visit us. He was on a couple other boards, and he was in town, and he was in the office, and he's been an amazing help. Just encyclopedia knowledge of people in the retail industry, and he's been just great at introducing us around. So a good group between Eugene and Dave. We're proud and happy with that board. And finally, just the cap table. As the guy said, about 76 million shares outstanding, really have drifted down over the last year. Small cap, I don't have to tell you guys anything about that. We've got a fair amount of good things happening. Some of it because these retailers are very limited on the press release when put out. We wish we could get more of a buzz around some of that, but it will happen. We're not too worried on that front. And that's pretty much it. So I don't know that I talked fast enough, but you can
that was perfect. That was perfect. I do want to remind everybody that's listening, if you got some questions you'd like me to ask Kyle, feel free to use the chat function. Type out your question and I'll fire it off Kyle's way. A couple things right off the bat. Like, I mean, I've had a discussion with a number of investors that follow your story. The concept is fantastic. Love the idea. And the pushback I get is how come it's actually taking longer? It seems like it's taking longer than it should because it seems like such an obvious idea. But what pushback do you get? What does cause the delays other than you're dealing with some large bureaucratic companies? What else can you sort of enlighten us on?
Yeah, the post-secure relationship, like I said, is a little bit slower than we thought would happen. We've got some early pilots, we got some tests, and they get distracted with, they've got a lot of other initiatives, and we have to work really hard, keep them focused. Their people are great. They love the product. And I think we got it to a point now where it's moved up. It's top of mind. They don't need me to sell as much as they did before. It used to have to get involved with all the conversations, and they're becoming EVO experts, welcoming system experts. Talk to the customer without me. And I think we're in a position to get those pilots beyond pilots now finally into like full rollout type situations. We thought we'd be there 6-7 months ago with them. It's just taken a little bit longer. On our own, we've got a couple large customers that we've been rolling out ourselves. And some of that is size of us, some is the size of the partner. Pretty happy with the one customer right now, though, how aggressive they are. We plan on having 200 systems in the US with them this year. And we're on track to do that. And that's, if anybody was on a presentation last November as we were raising that round, that was the number we wanted to get to. And we're totally on track to hit those numbers.
And explain to me again, I may have missed it, but the business model, like what do you get paid when some of this is happening? What's the percentage breakdown, if any? What does that look like? Yeah,
sorry, guys, this presentation is our public available one on the website. So that slide was probably missed from. So good question, Paul. Our base model is we would love to be in a position where we supply the hardware, we'll fund that hardware, we'll carry the hardware on our books, and we get paid a monthly SaaS fee to have that hardware out there. That's the ultimate position for us. And that fee for us would be about $500 a month. We're on the other end of the scale with our loss prevention our liquor store network in Canada, where there were small retailers, they have their own capability of really selling advertising themselves. We put that in there and said, okay, for this price, for us giving you this great loss prevention, all this, and we get that space in front of the store, we'll take 85% of the screen time and we'll sell the advertising. Mm-hmm. And then somewhere in between those, there's a model where there's a mixture of a monthly fee and advertising revenue. And it really is going to be retailer by retailer how that rolls out. We've been successful selling advertising. I had that slide up there with brands. Most of those brands have advertised with us, if not all of them. I'd have to look back at the slide. I think they're all brands that have been with us. Molson's have been a big advertiser of late. Sleeman's been on there. Government of Canada's been a big advertiser. We've had a fair amount on there, but we're not full yet. We're not to where we want to get to. And what we're kind of realizing is we're not a media company overall selling. So that's why we've partnered with Adapt Media, Western Media Group. They've been on board for 6 months now. They're spinning up their advertising teams to sell our inventory. We have to give them a cut, of course, but we believe that's the path forward for places that we're 100% selling advertising and taking the revenue off it. And that'll increase our revenue from there. If we flip back to the large US retailers that we're after, it's going to be a combination of SaaS revenues and advertising fees. And our goal is to get $500 per system per month. We put the system in, like I said, we get in there, we get analytics driven off it. We know what we can charge. About 3 months in, we know what we can charge off the systems per store. It's kind of all rate card based on CPMs, plays per thousand. If you look at that industry, between, in Canada, it's Pattison Bell Media. In the US, it's Lamar, JC2Co. And their rate cards, you can find some of them out there here and there. We're right in line with what their rate cards are. So it's dependent on traffic of the retailer and what that retailer can then pull out for the traffic that they can charge advertisers.
Gotcha. So, so clearly now you've got some commercial traction. You've got some, these units deployed. You've got a good number sort of going forward. You got visibility. What? How do you explain sort of where you get to as far as break even? Like, what's it take for you guys to get to some sort of operational break even?
Yeah, we will be there in the next 18 months with the number of store count that we have to get up to. We've really kept our costs in line as best we can. And we're still, we're 23 people. We're not big. We're not hiring an ad sales team now. We're partnering. We're partnering with install infrastructure out there. So trying to keep the overhead costs down, and so that we can flatten that right out and have the revenue ramp. We're in the early stages of course of that. We haven't crossed yet, but it will be within the next 18 months that we can get to that magical spot where we don't need outside capital.
And so to that question, exactly that, do you think you have the cash you need to get there?
Depends how fast we want to deploy. Right. So our cash burn is highly factored by the number of systems we're putting out there on our own. Prosegur model, they fund it. It works well for us. We get a fee-based return on it. We've kept a couple of these customers ourselves so that we don't have everything all in their basket, and we're all not completely tied to them. We're looking at a couple of other scenarios there right now, like I said, with the other partners selling the advertising. And we actually have had some inquiries about other people wanting to fund those systems in exchange for a piece of the advertising revenue off it. We've held off on that for now. So the outside funding is dependent on where we get to in the cash growth and how many more we want to deploy before we get to that time frame. So it's a juggle. All right. We want to be very cognizant that capital isn't unlimited out there, and we need to be able to take care of ourselves. But our one customer is really, like I say, really aggressive right now, and they're wanting us to put out a lot of systems. So that's why we're looking at a couple other angles. We'd rather do it in a way that doesn't dilute shareholders, right? If we have a partner comes in and we can have them fund part of it, great. But we have to weigh that against the long-term implications then of sharing our revenue, right? Like I say, it's something we don't think about every day, but it's on the agenda every board meeting, that's for sure.
Looking forward, where do you expect the mix of revenue to sort of show up? Like, is it going to be 50-50 like SaaS to advertising revenue, or where do you see you're going to get the bulk of the revenue from?
Yeah, I would say if we looked at a year ago, we fashioned it probably more in the SaaS area, but there is more upside in the advertising area. So it's hard to say, and it really is a retailer by retailer. With the ones we have signed today, I would say you're probably pretty close on the 50-50. The ones that are really into retail media that we're talking to, they don't want to share advertising revenue. They're almost completely saying the SaaS, but we're not signed on rollouts with those guys yet. So it's hard to say exactly where it's going. I think if retail media keeps where it's going, in the end, it would probably be more SaaS.
What do you see as your sort of greatest challenges right now? What keeps you up at night, so to speak?
Yeah, I think our biggest challenge has been deployments right now. We can build systems, we can ship them out, trying to be operationally efficient, right? To have the people that we use as third-party partners in the field installing and arriving at the time the equipment gets there. And a lot of them are, they're doing overnight stuff because the retailers want the overnight. And then while the installer's there, we have to commission the system on our side so that we can see it come online, make sure everything's good. And so we're having people up in the middle of the night. It's tough as a small company, right? So some of that operational stuff is where we have to get better. Definitely have to get better. The technology is solid. We know we can sell it. It's moving along. Operationally, it's probably us growing up a little bit around knowing what our capabilities are, possibly adding some key people here and there that can help on it, or leaning more on partners. And right now we've trended to lean on partners.
And how much does one of these systems cost, sort of fully deployed in one of these stores?
It depends on the configuration, but if you take an average configuration of like a 6-foot entrance with a double open door and a welcoming pedestal on one side and a gate to the other, a couple of cameras up above, and our system on the back, the hardware itself is under $4,500. So, and then it's deployment costs on top of that. So deployment costs hit us a bit harder than we expected as we started rolling out this large customer, and we've been able to really work them down. Lift, we need, the 24-foot ceilings, so we were running cable across the ceilings with these partners, and had to rent lifts, and lifts were going crazy for a while. I guess in the US Southwest, there's like a crazy amount of solar deployments again, so there were no lifts available. They were charging crazy premiums on it, but we've been able to whittle that down, working with a couple of partners that have their own. But those install costs can range anywhere from $2,000 to $4,500 as well. And eventually, when we're big enough, we think we could have a permanent team that moves around the country, and we don't have to pay like the markup rates that we have to pay right now.
Gotcha. What do you say we take some questions from the audience here? Let me get a few tagged up here. Okay, it says, can you provide an update on your negotiations with the corporate office of a large retailer and their franchisee?
Yeah, I think we're referring to a Canadian retailer there. We deployed at a retailer here in Vancouver that's a Canadian retailer that has 500 locations, and we put 3 systems in there. We're now putting in 5 extra of the we call them our welcoming players, other screens around the store. And we went to their trade show, and we signed up, but we had interest from 35 plus locations that wanted our systems, and they wanted to move on it. And then corporate got involved and said, "Whoa, we're doing some retail media stuff here. We have to get through us on that." And the stores themselves can do whatever they want, but we didn't want to piss off corporate. And so we've been working with them, and we're really close to them. That's why I don't even want to mention their name right now. We're really close to them giving us the green light that they're like what we're doing, and we can move ahead. A couple of times we've almost said, like, screw it, we're just going to ignore them and go install these stores because there's revenue there. We can take it. Right. But we've wanted to do this one right. We met with them again a couple of weeks ago, so it's almost there.
Gotcha. Okay, I saw on the cap table you had some warrants. Question here is, what are the warrant exercise price and what's the expiry dates, if you recall?
The warrant exercise price is 19 cents. So they're out there, and they're good for another 2.5 years. 2.5 years. November 25.
Okay, gotcha. Okay, and I'm just reading them as I see them here. For your 2 large retail clients, do you expect to install more than 1 digital screen per store? Will the revenue for the second or third, et cetera, be the same as the first LPS? So
right now, the one, like I said, the one customer that it's a franchise, but we only have the trial location. It has 3 screens in it. On our large US customer, there's a few stores that have 2. But our rollout right now has been really focused on 1, and we're looking at additional screens elsewhere in the store instead of at the entrance. I think that's a better bang for our buck. The welcoming pedestal, because of the loss prevention function, does carry a little bit of overhead in cost compared to a regular digital sign. So if we want to put in more systems, we're focusing elsewhere within the store. Predominantly, so to answer the question exactly, predominantly they're 1 screen per store today. There's stores that really could support 2 screens, that they have the traffic volume. Some markets probably never put 2 screens in because there's only limited traffic in it, but there's some that would support it. And we're hopeful that at that point we could go back, take the companion gate out and plop it in there. All the wiring's in, all the overhead stuff. The install cost to put the second screen in at that point is basically just the replacement cost of equipment and somebody to bolt it and plug a wire into it, because they plug in, they're wireless, they talk to our system wirelessly. So the upgrade path is good, but it is 1 screen per store for those retailers today.
Gotcha. Another question says, in the USA, what is the critical number of stores needed to start advertising?
We've tried to focus on contiguous markets. So we've been able to put a fair number in the New York market, the LA market. We're into Phoenix now, Atlanta. Raleigh, Durham, we had some in there. We're pretty much there now. If you have one store here, one store, they're scattered around the country, it's hard to attract an advertisement. We saw that with our liquor store network, but because we've been able to focus, especially LA and New York, we're getting a critical mass there. We're in a fraction of this retailer's stores, but we'll be at over 100 by the end of June, and that's a significant number. We should be able to see advertising dollars from those.
Gotcha. And then follow-up question, is the advertising revenue tied to the number of systems per store?
It definitely is.
Yeah.
Yes.
Yeah. Okay.
Yeah. The industry goes by cost per thousand, right? And so how many plays you can have, and then the cost is tied to how much traffic you have. And so if we have 2 screens, we'd obviously double the number of plays and the number of times ads can run out, but you need the traffic to support that.
And remind me, do your systems actually count the traffic that goes past it? It does, right? Yeah, that makes sense. Yeah. So I mean, it sort of it self counts how many times it's playing an advertisement to the people that walking past. Yeah, I got you.
Exactly. Yeah, we give rich analytics to the advertisers too, so they they like it for that. They get bang for their buck. They know how many times their ads were seen, how many people walk by it. There's dwell time. We actually have really good dwell time in the store. That's another thing that they ask. As much as we're at the front door, the front third of the store, you can see our system bright. The screens are bright. You're in the couple different areas at the front of the store. You don't miss them. So we're not just getting the walk by traffic. So our dwell time, according to the advertisers, is good.
Yeah, awesome. Okay, you have over 100 BC and Alberta liquor stores. Have you approached other provincial liquor stores?
We did an early approach to the LCBO in Ontario, and they don't use any loss prevention today. My understanding is they have an amazingly high theft rate. It's well known within circles that you can, I don't even want to say it. You walk in one of the stores and walk out and you barely get touched. They've started putting caps on the front of their top of some of their high volume bottles that they're basically locks that would put off the alarm if they went out, but they're doing very little there. And I don't understand it myself. We've talked to their online group that theoretically would be doing retail media. They don't seem to be doing much there either. So it's something that we've approached, but we haven't had any traction with them yet.
Gotcha. Not 100% sure what the question is here, but I'm going to assume it has to do with your total addressable market. How let's try to put some numbers to the market that you think you can capture reasonably.
So we have one retailer that we're rolling out right now that's in full roll, 1,000 locations. We've got test systems in a retailer that's 2,500 locations, test systems in a retailer that's over 2,000 locations. Those 2 have been in there for a while now. That's those ones that we're saying we're hopeful they're going to move to full rollout soon. We've never had a pilot stop that we don't take for it. Obviously, we have a lot of pilots still going. So we need to get them into rollout, but we haven't had anybody go the other way on us yet. ProSecure, actually, I'm remiss to mention this. They have a large grocery retailer in Colombia that's actually in rollout mode. So there's systems going down there with them right now. So they've got one more there, but it'll probably be 50 systems this year. It's not going to be a huge number. So our belief is in the next 18 months or so, we could be on rollout schedule to get 5,000 stores. Will we have them all installed? No. It's going to take 2 or 3 years to do that. But with our one large customer, we're going to be 200 this year, can easily be another 200 next year. And then we're closing on halfway, and it's a matter of how fast they go and how much capital we have to be able to deploy those.
Sure. I mean, talking a little bit. Your plant in BC. What's your sort of manufacturing capacity? How many units can you build in a month, week, whatever the number you want to use? But
so the most we've ever done, and when we did this, we kind of hoard them up a bit. We've done 10 in a day, and it was a little bit of stretch because I say operationally, we're so small and how we do it, but we were able to put 10 out in a day. We comfortably do 3 or 4 a day right now, and we don't keep inventory on hand. We keep parts on hand, and we build to order as we need them. We build them. Like we'll get a store say, okay, it's going to be installed next Wednesday. We'll build it this Wednesday and ship it. And some of that is, supply chain is still tough, and in some ways parts are still tough. It's getting a bit better, but we've been struggling with parts inbound for the last while. We hoarded some for a while and spent some money on inventory, but we ran out of those, probably over the last few months. And every week, we're getting low on this piece, we're getting low on this piece, but we build the order. So, if we can do 10 a day, that can easily handle the volume that we're going to have, this year. If the 2,500 store retailer says we want to roll out all, we couldn't handle that. We would need to lean on our partner ProSecure to then say, okay, we need your Czech Republic facility up and running.
Right. And I mean, you mentioned earlier that the average system costs $4,500. What's your cost to make them? Is it $4,500 sort of
that's all in?
Cost.
That's labor.
Yeah.
That's labor included. That's parts, labor. Yeah.
Gotcha.
We've factored it, and we're getting that down a little bit. When we were buying 10 screens at a time, or 15 screens at a time, they're expensive, and we've actually cut those in half recently. We've gone to some other suppliers. We've gone to build different suppliers for some of the metal brackets that we use. The other thing, guys, we built these systems so that they can take a hit. If you're looking at going to a retail store and you look at some of those loss prevention systems, they're busted, they're broken, they're leaning over, and that's a lot of money when you have to go back and replace a system, or you got to go in and roll a truck in there to fix something. And so we've made them so they can take a hit from a shopping cart. We've had them hit by pallet jacks, and they survive. So we're still using slightly more expensive parts, but we think long term that's still better than like a molded plastic on the base that's going to snap off.
Gotcha. And then the last question before we start to wrap up here. So on a, let's say, a per unit basis, like I'm trying to get a sense, you're thinking about 18 months to be break even, but if things were to happen faster, can we, is there a unit number you have to get out in the field to break even? You know what I'm sort of getting at? How many units do you have to get out there to comfortably break even?
It depends on how much cash we use to keep putting more systems out there, but it's going to be 1,500 to 2,000 systems.
Okay.
And then I'd feel very comfortable that can support anything we do going forward.
Gotcha. And then, okay, this will be the last question. As far as us investors paying attention from the outside here, what other metrics or catalysts do you think we should be paying close attention to sort of signify that you guys are either moving the right direction or moving faster in the right direction?
Yeah, we're going to try and keep reporting on the number of locations installed, even though the retailers they back up every time we try to disclose stuff. We're hopeful that as they really get into the advertising, that they're going to start promoting and say, hey, we've got this wonderful media network in store with these fabulous screens, and everybody can then infer that's INEO screens. We're not quite there yet with them to be able to do that. It's all still being sold fairly privately by them, but they will start talking about it at some point. From a couple of retailers that we're dealing with were bought by private equity companies, and they're just notorious for let's take everything under the hood and not tell anybody, right? I think that's the biggest thing. How are we deploying these systems? Some partnership. Watch for partnerships we're doing on the advertising side, on the deployment side. We'll start in like I said, we're in some discussions with those, but as those come out, that'll really help us. We've come to that conclusion as a small company, we can't do everything. We can't own it all. We really have to partner better and choose some good partners. We're not rushing into any of these things. We just have to pick the right ones. So I think that's your two markers in the short term, and obviously revenue, right? Yeah. It's got to be the revenue side.
Yeah, for sure. Listen, Kyle, is there anything we missed? Is there any key message you want to make sure everybody walks away with today?
No, I love the questions. I think covered a lot of ground. The patent is holding up well. It's given us a key differentiator out there. There could be some use of that patent that we're looking at right now. The RFID side of the industry is really starting to take off. Walmart's mandating certain product categories where the vendors must source tag RFID so that they know where product is in all the store. That helps us because then we know exactly which product is leaving. The demo that we did at NRF, National Retail Federation show in New York, and then just in Denver a couple weeks ago with RELA, we had our system set up. It's detecting regular tags and showing advertising, but we also had an RFID antenna in it, the combo thing. And so when the product went by that was RFID enabled, we flipped it right away to say, hey, here's the product leaving the store. And we were showing, Gillette razor blades or Advil tablets, and the retailers were blown away by it. You see, oh, we can have that, or actually we can actually know which products leaving. One, display it on the screen is one thing, but also within their inventory control, right? We're that last access at the store, and without us, they'd have to put in a lot of other hardware, and we can get two prongs with one. So that's exciting. I haven't talked about much that publicly, but we're pretty excited about that. And I got into that because our patent covers RFID as well. It's not just the dumb RF tags, but it's RFID as well.
Gotcha. Very interesting. It's been great. Well, I want to thank you for giving us the time and the update. We've been speaking with CEO Kyle Hall of INEO Technologies. Kyle, thanks for joining us, and we look forward to catching up relatively soon.
Thanks, Paul. Appreciate being here.